So, morning everyone. My name's Stephen Jones. I'm from Student Loans Company. So, my job really is to attend events like this, talk you through student finance, the nuts and bolts of what you'll get when you get it, and take any questions from you really about the application journey. So, the figures we're going to look at today are for 23-24. So, students who are starting this September. So I appreciate that they're not going to be exactly what you're likely to receive. So as far as you're concerned, I'd probably start looking February, March to our website to see what the updated figures will be for when you or your son or daughter are likely to be going into university. But it certainly gives you an idea of what's available, and then you can start that thinking journey that you're going to go on about where I'm likely to go, how much funding I'm likely to get from student finance, how much things are going to cost. Hi, oh, you're right. I'm just starting, don't worry. It's warm, isn't it? I wish I brought a pair of shorts with me. Come on in, you're right. We just started. So yeah, today we're going to look at what support you can get from us, how you can get it, how and when you repay it, an unpleasant but important conversation. We're going to talk about some budgeting and some key messages around that as well. I think it's probably something I never really spoke about when I ran events like this, but where we are now in the UK and the where we are with the economy, I think it's important, because failing to plan can affect the future funding that students are able to access through Student Loans Company. So I think it's relevant that we start thinking about that journey as well. The figures I'm going to run through today are predominantly for Student Finance England. Have we got anybody here from Wales, Scotland or Northern Ireland? Brilliant. So it's just me from the Principality then. That's fine. I'm all right. We are a vulnerable species as Welsh, so it's okay. So Student Finance England is a not-for-profit organisation that's funded wholly and solely by the UK government and the other devolved governments. So you've got Wales, Scotland, Northern Ireland. We're really here to help with funding for university. The two big costs of going to university are tuition fee and living costs, and those are the two main products that students access from us when they go to university, and we'll talk a lot about those. There's also some additional funding depending on your circumstances that you can access as well. We'll run through that as well. And the funding can depend on the type of course you're on, where you study. It can also be affected by your household income, so we'll run through that and what that looks like as well, and also your personal circumstances. So because we're funded by government, we are spending taxpayers' money, and as you can imagine, with any government organisation that spends a lot of taxpayers' money, there are rules around eligibility. For an example, we spend about 20 billion a year funding higher education across the UK. And the loan book is currently sitting at about 200 billion. So we're quite a big part of the UK PLC balance sheet, if you think of it that way. So students, to be eligible for funding, need to have settled status in the UK. That means that they can live here without any Home Office restriction, and you need to be resident in England on the first day of the first academic year of the course, having been living in the UK for 3 years immediately prior to this date. There are other eligibility criteria. Hiya. Yeah, you've literally missed nothing, so don't worry about that. There are other residency criteria that are available for our colleagues who live now still in the EU, and for students from the rest of the world. There are also different eligibility criteria for refugees, students who have come here with humanitarian protection, or are a stateless citizen, or more recently have come here from the conflict in Ukraine. So for the majority of those individuals, that 3 years ordinary residence is waived, so they're able to access higher education. There's a link on the website here now that will tell you about eligibility and who qualifies, etc., so you can read further on that. So we're going to look now at the figures that are available for 23-24. The quantum won't change that much. I think the uplift from last year to this year for maintenance support was 2.8%. So you can see it's going to be in that ballpark when you're looking to apply for student finance. So it's a good place to start as far as numbers are concerned. So let's start with tuition fee first of all. So this is the fee that the university will charge you every year for the tuition on the course that you are looking to access. So for full-time undergraduate students, the maximum tuition fee at any university can charge you is £9,250 a year. And that won't change now until the end of this Parliament. The UK government have confirmed it's going to stay at that level. It hasn't changed for the last 6 years either. It's always been a stable figure at that level. So the tuition fee, you don't have to pay any of that up front. So you don't have to worry about putting a deposit down on your tuition fee when you come to university. That's fine. We don't pay any money away until the student is confirmed in attendance by the university to us. So money can't go before that, and you don't have to worry about that. We don't give it to the student. We pay it directly to the university. So as a parent, you don't need to worry about Freshers Week because that money isn't going in their pocket. Now, full disclosure, my eldest daughter is in her first year at Keele right now. So I've sat in the seats you're sitting in now, and I will tell you that next year, year 13, will be the quickest year of your lives, but we'll come to that later. The fact that they don't get £9,250 is a massive relief. Your tuition fee is means tested. It doesn't make any difference what you earn as a parent or sponsor, and we pay it, said, directly to the university or college on the student's behalf. We pay in 3 tranches to the university, so it's 25% in term 1, 25% in term 2 and 50% in term 3, and we backload it just to make sure that the student isn't overexposed to their loan if they withdraw early from the course. So they'll only have that, if they in term 1, they'll only have that first term that will be sat in repayment. So let's now talk about maintenance support. So all eligible students for student finance will get some help from Student Loans Company, and you make the application for tuition fee and maintenance loan in the same application. They're just one question after another. Do you want tuition fee loan? Yes, no, yes. Do you want the maximum? Yes. And the same for maintenance loan as well, so you can specify amounts. The actual amount you get depends on your household income and where you live when you study. The maintenance loan is paid directly to the student, unfortunately. And as a parent, you lose control over this money completely. As a parent, you'll be used to now things coming to the parent or guardian of. And it's great because you get control and you get to see the bank statements and you know what's going on. And as soon as they go to university, it stops coming to you. So you have to keep asking them, have you done? Have you done? Have you done? And with my daughter, it was, honestly, I'm not going to go there. I've just got over the pain. So again, we pay in 3 tranches by each term, but we just divide it by 3, the amount that you get. And my best advice to students is to put that in a savings account when you get it, and then draw it down as you need it, so you don't end up eating porridge or spaghetti and ketchup in the last week of term. These products, tuition fee and maintenance loan, do need to be repaid, but not until you've left university and you're earning over a relevant threshold. We'll cover repayment in a lot of detail in a second. I like a table. It means that I don't have to talk as much because you can see what's going on. But basically this shows you the maximum amount of maintenance loan that you can expect to receive, whether you're stay at home when you go to university. Elsewhere rate is when you go to halls, so you choose to live away from home at university. London rate is always higher because it's massively more expensive to live there, we know, and there's also the overseas rate as well. All eligible students will receive that non-income assessed amount. Also, if mum and dad won't tell us what their household income is, that's what we give the student. And believe it or not, there are parents out there that refuse to support their children. The income assessed element is the part that's dependent upon household income. So this slide here, and I really apologise for everyone who earns more than £55,000 a year because the red's awful to see. And I can't change it because I've imported it as a picture. I'm really sorry. But it gives you an idea of the amount of funding that you'll likely receive from Student Finance England. As I said, Wales, Scotland and Northern Ireland have different funding rates. So this is household income. and you can see there that if your household income is 25,000 or under, you will receive the maximum amount of support. This is also true if you are an estranged student, so estranged from your parents, or if you're a care leaver. So we don't mean test those applications for those students. As the household income increases, so you can see the amount reduces until you only receive the non-means tested element, and that's the first tier of the red steps, if you like. And you can see the maximum household income before that applies is in the brackets at the top. So when we talk about household income, we're talking about the income for the last full tax year. So if you're going to university in September, it would be 21-22. When you are looking to go to university, parents, it would be your 22-23 P60 that we're looking at. Now, from when that gets issued, and we're told to keep it, and we put it in that drawer, and we keep it safe, because that's what we're told to do by our mums and dads, a lot can happen. You can retire, you can take a part-time job, you can be the manager and become one of the staff, you can decide to go part-time. There's lots of things that can happen to your salary between those two dates. So once we've completed that initial assessment on the last full tax year, if your income drops by 15% or more as a household, we can reassess based on that new income, and that can mean that the student will receive more maintenance support. And that happens a lot more than you probably think. Through the pandemic, with furlough, I hate that word. I didn't know what it meant, and now I do, and I never want to see it again. It happened a lot. So it's really important to be aware of that. The only caveat I give to that is if you've got a combined household income that is over 70,000, 75,000, a 15% income drop may not bring you back under that maximum threshold. So just be aware of that. But if it has happened to you, I would recommend you call us just so that you can talk it through with one of our advisors who can give you best advice. When we talk about household income, it's combined parental income, or if you're divorced or separated, if you live with dad, it's father's income, mum, it's mum's income. If there's a new step partner or boyfriend or girlfriend living in the house, that's what we base household income on. So we get some circumstances where dad's girlfriend says, well, I'm not supporting your daughter or son. Why are you taking my income into account? And that's because it's the household income, and that's unfortunately the way the regulations are written. If you've separated and you spend equal time with mum and dad, you need to understand we'll only ask you to nominate one of the parents that you live with for the assessment for household income. We'll ask for some further evidence from them to confirm they're separated. Most common thing is the council tax bill with the 15% discount, and that's enough evidence. And there's more guidance on our website about the type of income that we assess. It's the taxable income we're interested in, and there's a step-by-step guide for you as parents and sponsors to help you with that process, because when I did it, even in the system and been doing this job for 8 years, when I got to the page that said, now put your details in from your P60, I went, oh, I don't know. It's your gross income. I had to phone a friend to ask, and I'm so ashamed. So, as I mentioned before, if you are an independent student, then there's different evidence thresholds that you need to provide and different funding levels there. Most common that we see are students who are financially independent, or, as I mentioned, estranged students or care leavers, and there's some further guidance there if that applies to yourselves. So let's talk about the extra support that's available to students. Now, for me, disabled student allowance is one of the most important products that we offer, and I could literally talk to you about it all day, because I used to manage the team that delivered disabled student allowance in Wales before I joined Partner Services, where I work now. It's a product that's designed to level the playing field for a student who's got a disability, and that's massive. It's so disability, long-term health condition, a mental health condition, and after COVID, I'm not ashamed to say both of my children needed some help. Having spent 2 years in the same house as me, I'm surprised they're still here. And specific learning difficulties like dyslexia is probably the most common that you'll come across. Now, if you're getting help at college or sixth form now, you're going to need help when you go to university. And it's hard enough to go to a new place to live, to find your way around, to make new friends, to find where your halls are, which buildings your lecturer's in, and the way that you study will change. So your first lecture may be, this is your reading list, these are your assignments, this is when I want it back in, I'll see you next week. And that's different, so you might need some help, particularly if you've got a specific learning difficulty or a mental health condition that brings on anxiety. You're going to need someone there to help you. Now for an able-bodied student, that's hard enough, and I know because I've just lived it, but add a disability into that, and imagine when you come home at Christmas, how hard it is to go back. So if you are getting help, apply for it, the disabled student allowance as soon as you can. It takes longer to process than tuition for your maintenance loan, and that's because, one, you have to apply, you have to give us evidence of the disability that you have. We need to assess that, then we'll write back to you and we'll say go for an assessment, an independent assessment. That is not a test, it's a conversation about you. And then once they've written their report, we write back with the support that you can access. The other thing I'll say about disabled student allowance or disability in general is when you apply to university, if you have a disability and you sat there thinking, do I tick the box that says I've got a disability? And 90% of us will say no, because I think it's going to affect my ability to get an offer from them. And I really want to come to Durham. I really do. And ticking that box is the right thing to do. It doesn't affect your ability to get an offer. The people that make those decisions don't see that. There are a team of people here who want you to tick that box so that on an offer day, they can come and find you, or they can phone you and talk to you about your disability, what help you'll need, what support you'll need from day one. And they'll put that arm around you. And I think it's really, really important that we bust that myth. So, don't be afraid to tick the box. On a day like today, don't be afraid to ask the question, because everybody that needs to be here to help is here. So don't be afraid just to put your hand up and have that conversation on the side. We also offer support for students who've got children or adults who are dependent upon them. So we offer products like Parent Learning Allowance, which is specifically designed to help you with support for your course, childcare grants, and we also offer adult dependent grants. These are means tested. Your disability allowance isn't. It's not based on household income. It doesn't affect anything else. We don't need it repaying. And if we give you any equipment, we don't want it back. So you're in a win-win. If you've got a disability, you're a fool not to help take us up on it. We also offer additional support if you're on placement. And also don't forget, and my friend Catherine will talk more about this later, but there are bursaries and scholarships available. And it's free money. And there's not much of that around these days. So don't be afraid to ask, or you do any research about universities, have a look at what their bursaries and scholarships are. I had a friend I used to work with in Student Finance Wales who decided he was going to go back to university, and went back full time, still worked for us part time, and he enrolled. And on that first week, someone asked him some questions. He's first in family to go to university. He's got dependent children, and because he was then part time as well, he was on a low income. He had £3,500 worth of scholarships and bursaries that he didn't know he was going to get. And he bought a new car, but he didn't know he was going to get that money. And I think I don't think that's unusual. So there are some fairly standard ones like that help targeted at low income or first to university. And there are some really odd ones. Some universities offer a bursary of £200 if you're vegan. I don't know how they check. You've got to take a picture of your fridge, or I don't know what. But it's out there, and there's some, if your name's David or William or something like a £50 bursary. It's just to create attention, but it's worth investigating. Free money is free. And as I said before, these days there's not much of that around. So let's have a look at applications. So the good news is you don't need to do anything today, anything this year, you're fine. Next year we will open for new applications, end of February, beginning of March. We don't have a fixed kick-off date just because of the way that UK government asks us to manage regulation in the higher education sector. But if you sign up to follow us on Facebook or Twitter, you'll get a notification saying we're open, please apply. There's loads of reasons why I would suggest you apply as soon as you can for student finance. The main one is year 13 is the fastest year of your lives. You've got open days, offer days, you've got to study, get the results you want, you'll be hanging around with your friends, everything else you normally would do. There's a big trip to IKEA to get tooled up to go to university. Don't buy an ironing board. because my daughter's is a Coke stand and it's still in the plastic wrapper we took it in. And toasters, 3 people turned up in halls with toasters. So they could, honestly, they could toast bread for Britain. But think about that. It's very, very quick. And before you know it, you're at results day. And soon after that, parents, you'll be running up and downstairs in halls with boxes of stuff that are coming straight home in the same boxes at the end of the year. If you apply early for student finance, it's out of the way. You don't need to worry about it. Of all the things that you've got to worry about, it's done. If you don't go to university, it doesn't matter. Just cancel the app and apply next year. Because some people aren't certain whether you're going to take a gap year or not, I know. But just apply as soon as you can. Once you've applied, Student Finance England will run through your application, assess it. If they've got any other questions they need to ask you, then they can do that in plenty of time. If you apply late, it's going to take longer for them to assess your application because the queue's longer, and they'll still have to ask you the same questions. The things that hold up an application are identity, residency, and household income. Those are the things some people struggle to get through to us. 90% of students go straight through, never see an assessor because you've got a UK passport, you've been here for more than 3 years, and you pay your taxes through, you pay through PAYE so you can see what you earn. So that's fairly straightforward, and then you get paid. Just a health warning here, potentially, depending on how your university confirms attendance, that first payment in the first term might be a couple of weeks later than you expect. So just a reminder, mums and dads, you might need to help out through Freshers Week. That's probably the only big deal there. The truth is, too many students every year apply late. And that has a knock-on effect that's just unpleasant. So from the university's perspective, they're not getting those fees. And they don't get too concerned about that through the first term, but when you come back after Christmas, they might, depending on the university, they may take no action. They may ask you to sign up to some sort of payment plan, or depending on how long this goes on for, they may say that you can no longer attend lectures. So that's one stress that you need to get away straight away. The second one is maintenance loan. So the student won't be having any maintenance loan, potentially through semester 1. And that's problematic for mum and dad, obviously, but also for you as a student. That first semester is really important for making friends, networking, finding out where to go, and obviously you've got all of that student life, that experience that you need, that turns you into an adult or grown up. And the last one, I suppose, is for mum and dad, because with student finance not being there, then you're likely is not going to have to fill that gap, otherwise the student's going to have to withdraw. Now the problem with withdrawal through a lack of finance is that may affect our ability to support you in the future. So student finance will give you funding for your course duration, but that's 3, 4, 5, 6 years. We add in a gift year, so +1. And then if you come back to university, we take into account any previous study. So if you leave because you didn't have enough money in year 1, that's your gift year gone. So if you decide to come back the year after, you're okay, your course duration is covered. Whether it's 3, 4, 5 years, it doesn't matter. But if you have to resit one of those years, then someone's got to pay that £9,250 because Student Finance England won't. Now, if you've left because of a compelling personal reason, like bereavement, illness, family member illness, pregnancy, all those kind of reasons, then we can put that back, so don't worry about that. But it's if you choose to leave for a reason outside of those, it can affect your future support. So it is something to think about. The big myth here is that we don't need your preferred choice. We don't need an offer. We just need you to tell us which is your number 1 choice on UCAS. If you change that after results for whatever reason, then we can change who we pay that tuition fee to. Everything else, the assessment is about household income, identity and residency, isn't it? So it's not a problem. Just apply early. It's in the drawer. You can get on with everything else and you don't have to worry about it. And that's what I did with Hannah. Eventually, kicking and screaming, she did it. But she believed that, and all her friends did, that you needed that confirmed place before you could apply for finance. And it's a myth. So my advice to you is to get all the information together and do the application as a family. Grab a brew and just get it done, because it's outside of our comfort zone, isn't it? None of us want to do this because we've done a day's work or we've been in school all day, and it's something that's different. It's a bit uncomfortable. So get all the information together, university course details, and the same for parents, sponsors, P60, etc. Bank account and national insurance number are massively important. September, October, our number one call is, where's my money? And our standard answer is, because you didn't give us your bank account details, so we can't pay you. Crazy, isn't it? If you haven't got a bank account now, don't worry about it. Banks love students. You're going to university, you're more likely than not to earn more than the average citizen in the UK. You're going to need more financial services products, so they love you. So get a bank account as soon as you can. You need your national insurance number. For the unpleasant side, is that's how we track repayment. But we won't release funds without those two. You apply online at gov.uk/student finance, and once the student has applied, then because they put your details in as sponsors, we'll email you and ask you to sponsor the student. You follow that link and you complete that side of the application as well. We've got some guidance and support there for you now, which is grand. But if you all do it on the same day, at the same time, it's done. You can put the folder away with the passports and the P60s and all of that, and you can move on.
Just in terms of that, sorry if you don't mind a question. You said that this application comes out in February, March.
Yeah.
Tax year is April.
Yeah.
So
it's the last full one.
2 years.
Yeah, it's a year. It's the year before, and that's why so much can change between.
It's 2 years.
Yeah,
ago,
it's going to be 21, 22 this year. It's 22, 23 next year.
But in March.
So it's this April's P60.
Yeah. It's the one you get in April.
This one
Yeah.
for next year.
Yeah.
So
it's nearly 2 years behind. Yeah.
Yeah.
And that's why we have the current year income assessment, because it can be so different. Okay, and again, we've changed the way that the students portal now, so when you apply, there's more information than ever there as well. So if you want an update on the status of your application, you can log online now and find it. A few years ago, it literally just said, thanks for applying, we'll let you know. If you've got any problems, call us. And what that meant in July, August, September, is if you called Student Finance, all you did was listen to Vivaldi. And that's it. And maybe you'd get to speak to someone after an hour. So there's much more information available to you online. So it's more like applying for any other financial product or any other service that you would likely do online. And we're constantly making enhancements to that for the student. So we're going to look at repayment now. So we're going to just look at the facts, figures, and the interest, which has gone. So for students entering from 23-24, the repayment threshold is set at £25,000 a year, and it's frozen at that level until April 2027. So this will only rise annually with RPI, Retail Price Index. It used to have 3% added to that as well as interest, but the UK government have took that away. So in real terms, you will only repay what you've borrowed. And I know some of you will be thinking, but Steve, RPI is like at 10% now, it's crazy. Inflation's gone through the roof. There's a cap that's put in place by UK government to protect students from peaks and troughs like that in inflation. So I think last year it was capped at 6.5%, 7%, I'm not sure. Well, there is a cap. You don't start repaying until the April after you've finished your course or withdrawn from your course. So you've got time, if you're lucky enough to walk straight into a job when you leave university. I'm not sure what the employment statistics are for Durham, but I'd imagine they're pretty high. And then you'll start repaying if you earn over that threshold. You'll pay 9% of anything you earn over that threshold. And the debt is written off 40 years after you enter repayment. And that's that April date after you leave or withdraw from the course, not the first time you make a repayment. So those are the nuts and bolts of how repayment works. If you pay your tax through PAYE, so if you're employed, then you will pay it through PAYE, and it will show on the gross side of your payslip as a deduction. This table here just gives you an idea of the amount that you're likely to repay through the tax system on your salary brackets as your earnings increase. So if you leave university and your first job is £28,000 a year, you'll be looking to be paying around £17 a month, based on Department of Education's idea of where RPI will be in 2027. You can see it does increase as the salary of the student increases. There's some myths around repayment that I just thought I'd bust for you. Does it affect my family if I pass away as a student? Does it pass into my estate? And the answer is no. Does it affect my credit score? Believe it or not, Student Loans Company isn't a regulated financial provider. We don't have the prudential regulated authority under any of the products we have. We're non-regulated, so it's not picked up in credit scores. So if you are in arrears with your student finance, it doesn't affect your ability to get other financial products. The big one is, will it affect my ability to get a mortgage? Now, for my sins, before I joined student finance, I worked for a big bank. And I worked for a big bank for a long time. And I had to do my mortgage exams. Didn't want to do them, had to do them. Never sold a mortgage in my life. Not a personal one. But back when I got a mortgage, it was 3.5 times your annual salary, Steve. Off you go, find yourself a house, and it's easy. And it was so easy. They were giving away money back those days. These days now, after 2008, where we had a small financial crisis, and I was there for that. I remember sitting there withdrawing offers of lending to businesses, repricing, and you can understand why I decided to leave. Now a mortgage advisor needs to advise on the loan for the term of the loan. So if you go for a bank loan for a car, you'll get asked questions that you didn't get asked before, even if its term is 3-4 years. For a mortgage, they ask all sorts of questions now. And they have to, because they've got to base that recommendation on affordability. Now, because a student loan doesn't behave like any other loan, they're interested in the monthly repayment. Because if your earnings go below £25,000 a year, we stop taking the repayment. So the risk is much lower. We never call the balloon amount. We never call the full amount of loan. Whereas a car loan will, a credit card will, a store card will, your mortgage provider eventually, although they probably won't repossess the house, they don't like the bad press. But they can call the balloon amount. So all they're interested in is that monthly amount. So just bear that in mind when you're thinking about what's coming on in the future. The way I would think about a student loan, and the way I talk to it with my daughter, is that you are going to earn more because of the degree you've got, and you need to pay for that in some way. We've gone away from grants, unfortunately. I had a grant when I went to university. We don't save up for college for funding. We don't have that model like maybe in America they do. So it's a tax on your education, and it's based on your ability to pay. It's based on your earnings. So if you never earn more than £25,000 a year, you will never make a repayment to your loan. And there's no interest applied to that, remember, anymore. It's just in real terms what you've borrowed.
Steve, you mentioned gross a minute ago. Are those monthly repayments gross or net?
Gross.
They're gross.
They're based on the gross salary, yeah.
Okay, so that's good. Do you know what the net version is?
No.
Okay.
My sister's an accountant. I'm not the math man. So we're going to talk about budgeting now, and it's very, very real right now. I was talking to one of my colleagues the other day. He only popped into Tesco for a few things and spent 80 quid. And we all nod. Yeah, we've all been there. Stood at the till going, no, it's fine, don't put anything back. It's important to think about costs of going to university now. I'm glad you're here in Durham. Durham is a really, really good university. My nephew came here and read maths. He's got a fantastic career, and he walked straight into a job. But it's difficult. He lives in North Wales, same as I do. So commuting was a big part of the decision-making process. And whatever you think, talking to the younger ones in the room now, you will come home more than you think in year one. Definitely. Nailed on. Whether that's mum and dad coming to get you, or you getting the train back in 2, it's got a cost applied to it. So it's important to think about where you're going to go to university in the UK. Maintenance support, unfortunately, won't cover everything. It just won't. You've seen the figures now. You've all done the rough math calculation in your head, and you know where you are, and you're thinking already about accommodation, thinking that's probably more than the maintenance loan's going to be. It was for us. It was £9,000 last year, because my daughter wouldn't share a toilet or a shower, even though she does at home, and she's on a long course, she's on a 47-week course. So, yeah, it's important to start that budget. Now, UCAS you'll get really familiar with. I like it. I really like the site. I think it's got really great information about student finance on there. Save the Student is another good website as well. But they've got a budget calculator, and it's a good place to start. There's also some guidance from ourselves on gov.uk. And Save the Student do a student money survey every year, and it's based on information feedback from students, nothing from us, nothing from government, and it gives you a real idea of what the average student spends when they're in university. And when I first saw this, I thought, right, okay, you're becoming a plumber or a plasterer, Hannah, you're definitely not going to university. But the truth is that you break it down and you work through it as a family, and there's things that you can do to change the slices of the cheese on there if you like. Groceries is a big one. So before you go to university, learn some simple recipes. Don't burn rice like my daughter did, or phone up and ask how to get a boiled egg back in the shell. These things did actually happen. Going out, back in my day, you put 20 quid in your pocket, and when your pocket rattled, you went and got a bag of chips and you went home, and you end up looking like this. So cut the chips out straight away. But you pay for everything on a card now. We didn't. And I'm from North Wales, so I went out to Chester with my friends. I put £100 in my pocket, I thought we're having a night. Just how often I go out, you can tell I'm excited. But nobody wanted my money. I couldn't pay for drinks with cash, so it's all this. And we all know, the longer the night goes, the more excited we get. Even the taxi driver, no card mate, not carrying cash. I got home, woke up, £100 in my pocket. I thought, now, your older ones will know, if you came back with the same amount you went out with, and had a bit of a hangover, you had a good night. But it wasn't until I looked at my statement, I thought, oh my God, how much is a cocktail, and why did I buy so many? So you need to be able to plan for unforeseen expenditure, because it's going to come up, and how you change that graphic, if you like, to make sure that you're not eating porridge or pasta with ketchup at the end of the term. Also think about these. I'm not practicing what I preach, although in my car I've got a thermal mug. The markup in coffee is ridiculous when you think what's in it. It's a lot of it's hot water. They're £3.20 a pop. Have one a day while you're in university, so that's 30 weeks a year. Do the math. I told you I'm not a mathematician. If I gave you that money now, you wouldn't spend it on coffee. If you're anything like Hannah, you'd be at the Apple shop buying a new set of headphones. But it's a lot of money. It's cumulative, but we don't think about it. Same with bottles of water. Buy a thermic cup, jar of coffee, you're done for the term. You get tap water and a couple of ice cubes and you're fine. So just remember, there's ways to be smarter about the way that you spend your money with the university. And as my dad always says, you can only spend it once, son. He's 77 and I've got to visit him next tomorrow and I can't wait for more advice. 15% of students who go to university have never budgeted. And as I mentioned before, withdrawal because you've run out of money can have an effect on your future studies. And then you can see there that the average student saved up £1,280 before they went to university. And I think we all know that in the real world, that doesn't last as long as you think it would. So just remember, when you're thinking about going to university, do I get a summer job before I go? Build up some money, so I've got something to fall back on. Is that something I can do? Am I going to work while I'm at university, get a part-time job? Is that something that I'm going to have to do? Today you've got a perfect opportunity to speak to some people who are doing that right now. So the guys in the t-shirts outside, the light blue t-shirts, they're all student ambassadors. They're all getting paid for the work they're doing here today by the university. And it's casual work. So they put up an email saying we need some volunteers to help us, we'll pay you for it. And it's easy work, you're not tied to a contract. If you work for Tesco, and I'm only saying Tesco because that's where I worked when I went to university, is I want you there when they're busy. So Easter, Christmas and the summer. And that's when you want to go home. So unless you can transfer between stores, which you can do, you're tied to a contract. So while you're here and you're thinking about getting a part-time job, speak to these guys because they'll know where the work is, because they'll be doing it now. There's bars on campus that you can work at. There's lots of casual work in the area, so don't be afraid to ask. As I mentioned before, there's loads of great websites out there to help with student budgeting. If I'm honest, I like Save the Student, I like Student Money, I like UCAS. Those are the places that I would signpost students to. And I mentioned there, UCAS is a great website. You'll come to love it over the next next year because you're doing your application. We also have a quick start guide, and we've got all of the information I've talked about today and more on our YouTube films. So if you prefer to watch rather than read, it's in that format for you as well. There's a leaflet that's available from our practitioners website that talks you through the whole student journey from research to repay. So there's loads of links on there that are handy for you to go for further reading. And don't forget we've got our customer helpline. And as I mentioned before, if you apply early and you've got a question, you'll get through to them really quickly. If you try to get through July, August, September, you will know the 4 seasons off by heart. It just takes a while to get a call. We also use overspill at call centres as well, like all businesses do. So you're better off applying earlier. But if you are going to call, think like a student. So a student gets up late. Well, teenagers get up late generally. So if you call early, you'll get through quicker. So 8 o'clock in the morning, you're more likely to get answered than at 11:30 in the morning, because that's when the students have got up, picked up the letters and gone, oh my God. So please just think like that. So I'm going to leave you now, and Catherine's going to talk a little bit about some of the Durham specific information. But please, this is the time now to do all the research to make sure you get the right university or college for your choice, and you understand the finance that's available to you. Apply online and on time. Don't wait for confirmed offers. Just get it done. You've got enough going on next year. I absolutely guarantee it. And remember, with repayment, you don't pay anything till you earn over the 25,000 threshold, and it's based on what you earn, not what you owe. And there's no other financial product that is based in that way. So thank you all very, very much for your time. Further information is available on our website and thestudentroom.co.uk. I'm just going to hand you over to Catherine now. Thank you very much.
Very brief.
We'll definitely pass over to Stephen for questions at the end if you've got any that he can help with. And we're very brief and just give you a bit of overarching stuff that's available at Durham if you choose to join us. So Steve's already alluded to the fact that universities will have different kind of grant schemes and scholarships and stuff available. So the one that we have at Durham, that's our grant scheme, is called the Durham Grant Scheme. This is an illustration from 23-24, but it's been in this ballpark for a long time, so you can imagine it'll be fairly similar. In response to the cost of living crisis this year, they did increase it by around 13.5%, so we have added quite a lot of money into it to try and help people, as we know it is a real time where there's a lot of financial pressures, as Steve's gone on about already. I think we're all feeling that. So the way the Durham Grant Scheme works is it's fully means tested. So basically the amount that you earn will mean that the amount of Durham grant that you could receive will go down. So people whose gross household income is less than £30,000 as assessed independently, and every year will be the full Durham grant of £2,500 currently. And as it goes down, as your income goes up, between £30,001 to £47,200, it will be between basically around 2.5 to 780. Obviously, as household income goes up, the amount of grant goes down. So one of the key things we get asked is, can I still access the tuition fee loan, the maintenance loan, all of the kind of centrally available stuff? Yes, you get that as well as this if you're eligible. And because it's a grant, you don't pay it back. So it is fully for you. We urge everybody to share their information, their household earning information, when you make your applications through student finance, because this is the only way that we know if you're eligible for it or not. And obviously you may not be eligible for it in the first year, but circumstances could change and you may be eligible for it in future years. So it's always important just to share that financial information. It's the same wherever you apply. There will be some kind of scheme, there'll be scholarships, there'll be things available, and the only way that we can really know if you're eligible for them is if we've got that access to your info. So you don't have to apply for the Durham grant, which is also really nice because they'll have enough going on with your applications to uni, with your student finance application. So it is just based around us knowing your financial situation and us being able to assess it, and then you'll just be awarded it for when you actually start at the university, and you'll get that every year of your studies, and your income will be assessed every year as is standard.
Does
So
that turn out as a discount to the fee, or is it a cash payment?
No, you just get the cash, so you can use it on tuition. No, we wouldn't advise you use it on your tuition fee. You use it on maintenance, really, is what most people would do, just living costs. We also have a range of scholarships available, so we're aware that financial kind of need can get in the way of people coming to university, so we want to make sure that people have access to different revenues of money, and that financial circumstances don't stop you coming to Durham. So they are varied. Some of them are actually ones that the university funds, some of them are because we've got kind of benefactors and people who've been to Durham and have given us money and want to help certain students come in. Some colleges will have different scholarships, so off the top of my head, I can't remember which college it is it John's that has like, is it John's or Chad's, the choral scholarship, kind of quite niche things, and then you have departments who offer them, and we have specific criteria. Means testing will usually be part of that. They do have different application deadlines, which is a little bit annoying, I appreciate, but they do tend to be around like the March time when you've applied. But I would just urge you, if you do apply, just to have a really good look on the scholarships page. If when you've signed up for things like this at the uni, if you've opted in to hear from us, so, you know, will you receive marketing emails from Durham, that's the kind of thing that we'll use to tell you about stuff like scholarships, to make sure you're aware. And if you apply via UCAS to Durham, I would urge you to sign up to get our emails, because in our emails that we'll send you as an applicant or an offer holder, we'll be making you aware there's a scholarship that we think you could be eligible for because you've applied for law or history or whatever. Really quickly, just some of the other sources of support that are available to students related to student finance. At the moment, we've got the Instant Access Hardship Fund. So that's, as you'd imagine, that's for if you find yourself where you've just run out of money and you're like, I haven't got enough money to actually buy any food, then you can go and see somebody and they'll like assess and check that you're not just kind of trying to get some free cash. And they'll provide a bit of money as a bit of a stopgap to make sure that you can feed yourself and do the basics. There's also the Student Support Fund as well, which is potentially a little bit more money. And again, it's just assessing if you really need that as a short-term loan or a vacation loan potentially as well. The Student Employability Fund will help people who might need a bit of extra help to progress their careers, so there's money that you can access that might help pay for a travel card, for example, if you need some help with getting to and from employment that you're taking on to further your employability in your career. So this is all info you can find on our kind of cost of living hub, so it's all together in one place if you want to look. And I'm not going to go on anymore. I think all of this stuff has really been covered by Stephen in terms of the great resources that are out there. Tons of things that you can read about student finance. If you do come and study at Durham as well, one of the other places that our students go to for support is the Durham Students' Union. They're really good just generally if there's any kind of support issues that you have. Obviously, because we're a collegiate university as well, I'd always say if you're a student at Durham and you have any sort of problem, it's a good place to start is to go and speak to somebody in college, because they will be great at signposting you. And it's obviously one of the benefits of coming to Durham is that we've got that college system where you can actually very quickly flag, I've got a problem, whether it be financial or whether you're having mental health issues or anything like that. You can speak to somebody in college.